They say that nobody who earns tips will ever hit that number, or that their W-2 income would automatically knock them out of the income limits anyways. Every time I hear that, I can tell that that person saying it has never really worked through a real tax return for people who earn tips. I mean, there are different industries where people earn tips, but that take is totally wrong. Let me walk you through a real world example that proves that $25,000 cap is attainable. I got a client. He works as a bouncer at a bar, okay? He received a W-2 as a statutory employee for about 22 grand. $22,000, not a lot of money, right? That's his reported wages. In his world, he earns a lot of tips. Most people would think there's no way a person who makes $22,000 makes enough to really matter. But that W-2 is not where the story ends. Because this guy, being a bouncer at a bar, hey, I didn't know bouncers got tipped. Every single day, he tracked his tips using an app called Tipsy, and that S is like a dollar sign. Daily entries, okay? Consistent tracking. Month by month screenshots come in through my encrypted portal. I'm doing his taxes, okay? When we added up his tips for the entire year, that total came to a little over $85,000. $85,000 in tips. Okay, 22 grand doesn't seem that low now. None of this was included on his W-2. Now, that doesn't mean that this income isn't taxable. It has to appear on a Schedule C, but he's a statutory employee, so self-employment tax doesn't apply to him. So that's a distinction that matters. There's W-2 wages, and they withheld like a couple $100 on federal tax, but Social Security and Medicare were already withheld on that entire amount. He qualified for the max deduction on the tips because, let's face it, you can take $25,000 worth of tips. Nobody earns that much in tips. Well, I haven't seen how this works outside of my own assumptions, is what they're actually saying, because I meet clients like that all the time. Or they say their W-2 income would qualify them. They're misunderstanding how many tipped workers are actually paid. A lot of tipped workers don't fit the stereotype people have in their heads, like waiters and waitresses. This isn't servers working a few shifts a week, or part-time, or even people who are working overtime as a server. Think about bouncers. Think about bartenders at high volume bars. They get a lot of tips. High-end hospitality, or like bottle service. Event staff. Valet services. Probably some security roles, huh? Entertainment and kind of nightlife adjacent lifestyles. In many of these roles, the base wages are relatively modest, you might say, but the tips are substantial. So this new law helps them. And those tips, when they're tracked daily and reported correctly, the numbers add up really fast. So this is where the documentation that you keep makes the big difference that you need between a real deduction and a missed opportunity. Daily tracking matters. Consistency matters. Having records that tie out each month matters. Record keeping is your friend. What doesn't work is trying to recreate tip income at the end of the year from memory. Don't recreate tip income at the end of the year from memory. What really doesn't work is assuming a deduction doesn't apply just because someone online said it was useless. You don't know how many times I heard that. This is one of those deductions where the people dismissing it usually haven't actually worked through the mechanics or had a tax return like this in front of them. They haven't actually looked at statutory employee income, and they haven't dealt with unreported tip structures. They haven't reconciled daily logs without annual totals. They're speaking in theory, not in practice. Now, if you're watching this and you earn tips, this is the moment where you pause and think before rushing to file. If you're not sure whether or not you qualify, or you're not sure whether your documentation is strong enough, that's when you gotta slow down and get some clarity. And clarity is the reason why I'm here. If you want help reviewing your situation, you can click the link right over here on the side of the screen. Just click the link. No pressure at all, just a way to make sure that you're not leaving some money, some deductions on the table, or setting yourself up for problems later. Nobody wants that. And here's another important point that often for statutory employees who earn tips gets overlooked. That $25,000 limit is not a target, it's a cap, okay? This guy, unique. He hit the cap and he blew right through it. But the caps only matter if you reach them, right? 25,000, he went 85,000. A lot of people do meet the cap, and they don't realize it because they're only looking at their W-2 income. Or they're assuming because their employer didn't report the tips on the W-2, those tips don't count. Your records count, so keep good records. And I can't recommend any of the apps. I mentioned one earlier on. That's what he used. And you need to handle your records correctly. And handled correctly means reported, documented, and supported. That means you save that. This guy took screenshots and sent them to me. I'm gonna hang on to them for 3 years. This is also where people get trapped by bad advice. Some people are told not to report tips at all to their employer. Others are told that the deduction isn't worth worrying about. $25,000, you can buy a car for that, because both of these ideas are wrong. Unreported income creates risk. So report all your income. And assuming a deduction doesn't apply creates a missed opportunity. What if this guy didn't keep track? The right approach lives in the middle. So last thoughts, report the income, document it properly, and then apply the deduction when the rules allow it. This is a unique year. That's how this is all supposed to work. And this isn't some edgy case that just slipped through the loophole. This is a deduction that was created. It applies to real people in real jobs who really just don't look like what commentators imagine when they talk about it in terms of tipped workers. So no, the $25,000 tips deduction is not useless, it's not meaningless, and it's very, very real. Ask my client, bouncer at the bar. But it only works when your income is structured the right way and your records support it. He's got the W-2, he's got the records for the tips. So if you earn the tips, you work in hospitality, nightlife, security, or any role where your tips are a major part of your income, don't assume that this doesn't apply to you. So if you want to get real numbers, you're going to have to be the one keeping track of that, because this is a brand new law. Your deduction is based on your documentation. So make decisions based on facts, not how the internet gives you hot takes on what things are supposed to be like. If you deal with tip income, statutory employee income, or you're just not sure how this or if this applies to your situation, that's exactly what we help out with. You don't have to guess, and you don't have to learn the hard way. Thanks for watching, and I'll see you in the next one.